Hello and welcome. This is BQ Prime. I'm Agarwala and this is the closing bell. We are taking stock of, a substantial weakness coming in our markets at this moment. The question until yesterday was whether or not we could see about a short covering in today's day of trade, but that really hasn't turned out to be. And in fact, we have seen a lot of the key benchmarks only slide further downhill. The question then is, where do we go from here? And can we start looking at certain pockets in the market and perhaps nibbling into it now, even if you don't want to go in a whole hog. And for that, we will get you a fundamental view as well as a technical view in terms of how we can approach these markets going forward. And for that, we have Chakri Lokapriya. He's the managing director at TCG AMC, who is going to give us a fundamental view. And along with him, we also have Aditya Agarwala. He is the head of research and investment at Invest4 Edu. Thank you both gentlemen for joining in and taking the time out. Chakri Lokapriya, I start with you. Your view on the markets at the moment, considering we have seen that slide further, are we looking at a little bit of a pause for now at least? And in that case, how would you approach the markets now?
Good afternoon. In the last 3 days, the Nifty is down about 3.5%, and that's primarily large cap. On the other hand, the mid cap is down about 4%, small cap 6%. And it tells you that individual stocks, very high quality stocks, have fallen down, 10, 15% or more. So this is partly, the Israel was a tipping point, which kind of fundamentally altered temporarily. The oil went to $90. The rupee has fallen to a record low. This kind of increases India's import bill. If the trend persists, and therefore it puts a strain on India's balance sheet. This is the cause for concern, which led to the markets which were looking for a reason to book profits. So many strong fundamental companies across board are down. So I think fundamentally, if you look at earnings results, for example, PNB, Canara Bank, Axis Bank, etc., ACC, the cement company, all reported good results. So I think fundamentally the market is strong. There has been a bout of profit taking, but I think it is time to buy into the weakness.
Okay. Aditya, I'll come over to you then. And what are you making of this slide? Are we near the end, at least in the near term? I know that a very popular metric that the broader market uses, that's the relative strength index. And at least on the 14-day period, we're looking at both the Nifty as well as the Bank Nifty trending well below that. Of course, that said, we're also approaching, though we're still far away, towards the 200 DMA as well, at least as far as the Nifty is concerned. What is your view here?
Good afternoon, Agam. Thanks for having the show. So I'll start off with Nifty first. And immediately, if you talk about it, I will talk about it from a very short-term perspective, maybe from tomorrow and maybe next week's angle. Yes, we could be in for a bounce because today is the sixth straight day of declines. And yes, we are sitting on oversold levels. And if I flip the charts to a shorter-term time frame chart, I do see positive divergence building up on the indicator, which is the RSI, along with price. All that suggests that, yes, there could be a temporary bounce in the markets. I don't rule that out. Till what level that bounce will be, that is something interesting to watch out for. I'm playing with a target of 19,000 to about 19,200 immediately because we are down significantly. On the Bank Nifty as well, I believe, Agam, that could be in for some kind of a short covering rally. And also, along with that, the previous peak of June 2022 is where we are currently again back to. So I believe, as far as Nifty and Bank Nifty is concerned, from a very short-term time frame, yes, we could be in for a bounce, but that is not the end of this is not the end of the fall. I would say we are in for more downside on the Nifty. If I talk about a quarter or maybe more than that, we could be in for a decent slide, and I wouldn't be surprised if Nifty actually tests its 200 DMA, which is at 18,600, maybe break that as well.
Right, fair enough. Chakri, if I look at the returns on the major indices on a financial year to date, we have the Nifty, which is still up as much as nearly 9%. And the NSE Midcap 150 is still up 26% after the slide that we've seen yesterday. My question really is to do with valuations. One, keeping in mind the kind of earnings trends that we have seen over the past couple of quarters, are we still looking at considerably higher valuations at the moment? And if there are any pockets at this point in time which offer at least some amount of value that you can dip into?
That's a good question. If you look at both large cap as well as mid caps, for instance, take the PSU, State Bank of India large cap. The company after the fall now trades at below book value. Now, for a company as large as SBI, that valuation is very attractive. On the other hand, on the mid cap, you take companies like PSU companies like REC and Power Finance. They have corrected about 15% in the last 2-3 days, and they trade at about 0.8 below book, 0.8 times book value. So that's again a very attractive stock. So in spite of the fact that these stocks have actually done very well over the last 1 year, REC, Power Finance have more than doubled, but still the valuations are on their side. I think you'll find a lot of mid caps and large caps where I think the fundamentals are still hold intact and therefore can buy.
Okay. Aditya, coming back to you, in the long run, and if we look at things just beyond perhaps the next 1 week or next couple of weeks, what's the way forward? I know that you have suggested that there could be some more weakness on the cards. Of course, if you consider the last 1 or 2 odd months, sure, we have come up from lifetime highs. Based on that, maybe over the next 1 or 2 months, what are the support levels that you could possibly be looking at as far as the Nifty and the Bank Nifty are concerned?
Agam, before I touch upon Nifty and the Bank Nifty, I would just like to talk about the broader markets as well.
Sure.
This is something that I've been talking about for some time, that I believe there is a big correction coming in the broader market space. And even now, if our viewers are sitting on good gains in some of the large mid cap and the small cap stocks, I believe this is time you should actually look at revisiting your portfolios. And wherever you're sitting on big gains, it's not a bad idea to actually book out partial profits and then sit on sidelines, at least in the broader markets. You can actually look at large caps at this current point of time, because I believe there is more pain which will come through in the mid cap and the small cap space. Now, coming to levels of Nifty, I believe the first support level is somewhere around 18,800, 18,850, where we are currently trading at. If this is broken, the next immediate support level is 18,600. The major support that I'm playing with, Agam, is 18,400. Between 18,400 to 18,600 is where I believe markets could form a temporary bottom. And from there, we could see a pullback, a decent pullback, I would say, price-wise. But not to forget, we are yet to have a time-wise correction. Markets give both a time-wise and a price-wise correction. We have seen a good price-wise correction in the past 6 trading sessions. It's time for a time-wise correction. Now, so I'm looking at a consolidation in the markets, which could be a time-wise correction, with immediate support levels at 18,800, 18,600.
Okay. Chakri, back to you on the possibility of some concerns. Now, I know that you briefly alluded to crude going high, which could impact inflation, of course, in India. You also spoke about the potential rise in US yields, which could also mean an outgo of funds from India as well. But could you further, elaborate on the potential concerns that the Indian markets could face fundamentally over the course of the next 2 to 3 months?
Because of what's happening globally, Indian rupee has at a record low, which means it also increases the import bill of one, of course, India's balance sheet oil. Second, import parts, whether it's mobile phones, ACs, air conditioners, various have import components, so all those will get more expensive. Unless, of course, there is more clarity on the Israel war-like situation, and again, the rupee kind of rebounds. So this will again impact margins, and I think this is partly a concern. And so the thing is very fluid right now. With rupees at record low, I think margins will likely to stay lower for companies, or in other words, be revised down for FY24. So having said that, the market still trades at about 18, 17 times, so it's not an expensive market. Maybe we can tread water, but it's unlikely we fall too much further.
Right, fair enough. The final question to you, Aditya: should we likely see some amount of an up move? At what point in time can we actually say that, okay, the short covering rally is over and perhaps we're actually starting to see some strength return in the markets? I'm assuming that one would want certain fundamental triggers to come in, but as far as technicals are concerned as well, what would you watch out for there?
Agam, I would start with a high low on the Nifty. That is the first point which suggests that the temporary bottom is in place and we are in for a uptrend is when we form a high low. So I need at least 2 to 3 trading sessions to do that. If I talk about levels, 19,400 is the immediate level that I'm eyeing for. Once we start to trade beyond 19,400, 19,500, these are the 2 resistance zones, is where I will go look to buy the dip on the market and look to go long trades. Time we are comfortably trading above 19,500 and form higher lows, I would still not bet on the current trend having formed a bottom in place. Till that time, I would still avoid going aggressive long in the market. Having said that, like I said, there could be a short coming rally till 19,100, 19,200.
Okay, well, it is 327 at the moment, and Nifty, in fact, is still at its day's low. So it has, in fact, turned out to be the weaker of the major indices. As far as the Bank Nifty is concerned, we're seeing a slight bit of recovery from day's lows, but still trending well below the 40 to 500 mark at the moment. And of course, the Nifty has lost out on the 19,000 mark as well. Gentlemen, both of you, thank you so much for joining in and giving us your views on the markets going forward. For now, of course, the markets aren't exactly looking very good, and we're in fact also ending the October series on a considerably weaker note. Can there be a recovery? Well, that's something that we're going to have to we'll wait and watch out for over the course of the next few days and weeks, perhaps. But we are signing out for now, but don't go anywhere. There's lots more lined up. Stay tuned to BQ Prime.